Hello and welcome to today's quick video, which is called FOMC Aftermath, Mideast Developments, and the Fox News report about all options being on the table, as per White House. So, my unfortunately premium prediction is slowly coming through. Here we go with the US dollar, which has reasonably stabilized, and that's arguably a good sign. As regards the daily picture, these are figures right after Wednesday's market close, and we can see that those market breadth indicators had not been stellar, I mean to the upside. Not exactly, however, there are certain developments which are well worth noticing. You can see as well that the percentages of stocks trading above various periods of the moving averages has not been following to the upside, and that we are still kind of struggling. However, that upswing being rejected is there, and as I have yesterday told to premium clients over the premium diagrams, be it daily analytics, meaning swing trading ones, or purely intraday trading ones, this is usually the case that on holidays such as Juneteenth, when US markets are closed and we have just CFDs to rely on, those prior moves set in motion are continuing for quite a while. Before markets get ready to position themselves for US Open, which is what we are seeing unfolding in this chart. So you can see a straight dive yesterday in S&P 500 on this hourly chart, followed by overnight gap to the upside, quick run, and stabilization. So which way will it go, and what are the stock indices telling us? If you examine this Nasdaq one against S&P 500, it's still apparent that tech is slowly leading, still leading. However, on the last couple of days basis, following great run-up, which I had commented on right at the time of job market most important data released, we had seen then Russell 2000 giving up that outperformance of that time to a retreat, and with great difficulty recovering from that. However, today this is the leading sector. So does it tie in well with short-term bonds or long-term bonds stabilizing, rising? Not really. This is well worth watching because equities and bond markets are not in tune. Of course, whereas other assets are reacting in a different mode to that. One might be surprised that gold and silver are not rallying given all that is unfolding in the Mideast. However, well before FOMC on Wednesday, I have been clear about macro factors having the upper hand, even if FOMC Powell turned out not bringing additional clarity and actually facilitating the downswing in equities called. So these two precious metals are being pressured, while Bitcoin is building a base and peaking higher above 105k. Quite understandable. You know about what is going on with the stablecoin land and how it impacts traditional financial stocks. I mean, not banks right now. And as well, crude oil, that is keeping up there, not rising, not retreating, meaning steady build-up. One heavy takedown on yesterday's hourly candle, and seems basing with a slowly bullish tendency. So much for real assets and how they are reacting.